welcome to the closing beat. Happy Thursday to you. Still think this is like the coolest thing ever, man. Charles sent me that. General Motors stock certificate from his wife, ex-wife. Super cool, man. I love stock certificates. Anyways, welcome to our show. We're financial advisors here at Jazz Wealth. I hope you check us out, jazzwealth.com. While other advisors are playing checkers, we are what? It's all good? Okay. While other advisors are playing checkers, we are playing chess. Actually, one of the cool tips that we had, we got from a 28-year-old that was like, hey, I don't know what I don't know. How do I know what question to ask if I don't know what to ask? I want to get my dough straight. I hear you talking about it. Let's do it. We're actually putting a team on this case, and we're going to help this person avoid the financial pitfalls of the late 20s and into your 30s. You know, when you buy in the car you shouldn't buy, and you're going the places you want to go, and clothes and stuff like that. Hey, our Wine and Wealth here tonight. We're going to talk about the top wealth planning and retirement, more importantly, planning strategies that we need to implement. And so if you're one of our clients and you're around retirement, in retirement, we're going to talk about in detail how we do the different aspects of that. What are the big challenges? How do we solve for it? And we're going to show you there. Hopefully I can spark a few questions from you guys, because I love that part of the gig there. Anyways, if you're not a client, hopefully you'll check us out at jazzwealth.com. If you like that class, it will be recorded, archived, and saved there forever for you. There are hundreds of Wine and Wealth classes at this point. All right, let's talk about the stock market here today. So the Atlanta Fed, remember we talked about this? They were projecting like well over 3% growth for the third quarter, and I was like, I don't know how we get to that. Well, as we've gone along, they keep raising it. And I follow all JP Morgan, Morgan Stanley, and Goldman Sachs and stuff. Their analysts, they just kept raising the number. Goldman Sachs yesterday made it 4.7, and they thought that that was underestimating. I'm like, wait a minute. Well, how's that happening, right? I've been kind of teasing you guys about that. Well, if we look, the Atlanta Fed model, here's how that looks. I took this directly from them, right? I didn't even bother writing anything. I'm not even sure what that spells. This was their estimate, and this is when they made that estimate. So it's a forward-looking estimate. And when it first came out in July, they said, well, we expect it to be about 3.6. It's the first time we talk about it. Then they've raised it as high as 5.9, just for the third quarter, not for the year, nothing like that, just the third quarter. They've lowered it and raised it, blah, 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 whatever. So they come out to 5.4%, which was down from 5.9% just in the third quarter, above any range of any reasonable expectations. What did they know? I thought, well, maybe they just all thought that. So I looked up every single one of the other Fed branches to see what they thought. You ready? I am. The New York Fed had it at 2.55. Cleveland Fed, 2.38. St. Louis Fed, 2.31. Everybody else, 2.3. And we got 4.9. Okay. Yeah, that's above my pay grade, because I'm not entirely sure how that happened. Nonetheless, that's what happened. That was the news that we got there. We also got durable goods orders this morning. Those were way up. You guys with your money out there. Also got the core inflation number, which is good. So that's something like that the Fed likes to look at. Core PCE, I should say. Came in at 2.4% versus 2.5. It went down just a tick. That's good news there. Continuing claims were the only negative. There was a whole lot of people continuing to take their unemployment claims there. 1.8 million on continuing claims week over week. That's the second highest all year long. So that was a bit of a negative spot, but that was really all that we had going on there. If you look at the S&P, we already started by gapping below the support we've been talking about, the three areas that we've been saying, oh, everybody likes using these areas. If we go below those areas, you have three groups of people that will say, I'm out, or taking some profit, or selling everything, whatever. They're net sellers versus buyers. And so you go, okay, no problem. So all selling basically throughout the day, had a little afternoon, kind of after lunchtime rally there. And we now find ourselves flirting with correction territory. Correction, that was like the drinking word of the day. It seemed to be everywhere because the NASDAQ is doing that. Let's take a look. Okay. I put all four major indices on here, really so you could see the NASDAQ is now in correction territory. I did this a little bit earlier, so it's a little off. In black, you have the bear market. You've got the S&P in black, just so it stands out a little bit there. We are now down basically 10% off of the highs. This is a percent off of highs chart there. I don't know what the Dow is doing. I have like the least sort of feel for the Dow this year. I'm not entirely sure what's going on. And the Russell. I think I said correction here. Correction, not bear market. The Russell almost into bear market territory there. Not obviously looking very good. 47% of all stocks in the S&P already have a 20% or greater pullback. Basically half of the S&P is already down 20% or more. So that's, think about it. It goes back to where we're like, why is the market going higher? There's only 7 stocks. I'll give you 10 stocks. There were only 10 stocks left in the market. Everything else, remember we talked about, they're not doing anything. They're already pulling back. So everything else already kind of telling the story there. Of course, it's easy to say afterwards, but you get the gist of it. The NASDAQ finally pulling back. We just said yesterday, remember, if the NASDAQ wants to pull back more in a more volatile way, that would actually be okay. It's up so much, right? It hasn't really been pulling back. Look at this downtrend here compared to the S&P's downtrend, much steeper. So, well, okay, it's been holding up until now. Almost back down to the 200-day moving average there. You wanted a 10% pullback, didn't you? Anybody? No? Okay. The Russell 2000 actually leads the way towards the bear market there being down. The only real rally attempt we've had is 4%, just under 4%. That's it. Nothing more interesting than that. So it's a kind of a, well, and obviously weak index. There's no other way to say it there. All right, the S&P here today, also a fairly broad sell-off. I can't blame it on those big name stocks, right? Microsoft, of course, did what it did today. You get the, that performance there. Alphabet was one, hey, headline stock, right? They had their earnings and pretty disappointing and all that stuff. You can't really blame it on that because about 40% of the S&P today was lower. So that's fairly broad. That's not like a full-on bloodbath type day, but pretty much there. We now have, ready for more stats, 83% of all stocks out there, not just the S&P, 83% of every available stock that you can trade is now below the 50-day moving average. That's my blue line if you're ever looking on my chart there. 80% below the 200-day. That's the red line right there we've been talking about there. That's pretty nasty, right? So the people that wanted the pullback, myself included, hey, congrats, right? We're getting it. Where does it end, right? What do we look for there in terms of having an end to it? Well, we can get extended. We can find ourselves with a whole host of oversold stocks in the S&P, which we're about there, by the way. And as that happens, you find people that go, maybe there's stuff trading at a discount, right? Maybe we look for stocks that their trailing 12 months earnings are actually trading below their average. And they're also discounted, meaning price-wise, they're also discounted. Maybe we look for stocks that have not fallen 20% there, right? So, for example, I'm not telling you to buy these stocks. I'm just saying this is a brief analysis, right? So, CBOE, this stock is only 1% off of its high, whereas almost half of the S&P stocks are more than 20% off of their high. So that's good. For whatever reason, this one's holding up. Walmart, I'm not saying it's a buy. Please don't think I'm saying that. I'm just pointing out, that one didn't pull back. What's going on with Walmart? Well, because the economy's not slowing, supposedly, right? So everybody's, okay, well, that's fine. Walmart's doing their thing. Lowe's Corp, not Lowe's, the Home Depot competitor there. Same thing, right? In the same group, CME Group. All right, it's holding up a little bit. That's market volatility. McKesson, if you want to stretch out a little bit and be in different areas there. You can look at Cencora. So if you're familiar with what they do, they're like, hey, we all take some kind of drug, right? Well, they get it. They make sure it gets to where it needs to go. So that's them. That hasn't pulled back very much. In the healthcare space, Cardinal Healthcare. Just pointing out some names here that you can look around and see not everything is bad. Unfortunately, that's not a lot of them. As you work your way down the list, Costco is 5% off of highs. So that's a little bit better. It's not as good as Walmart, but it's a little bit better, right? And it's not as bad as being down, 20% like some of the other stocks in the S&P. So I just like to point that stuff out just so you can see, like, there are some stocks that are refusing to pull back. Okay. Maybe now's the time to start building that list. Or if you own those stocks, maybe now's the time where you say, I might want to add a little bit more if it should pull back a little bit, right? So that's how you kind of take a look at that one there. Okay, moving on. The NASDAQ actually had its worst day of the year yesterday. Today was not the worst day of the year. Yesterday, worst day of the year, down 2.5%. I was going to do this whole thing and like try to show you whatever. We put together the data and I'm like, I'm just going to tell them, right? It is somewhat normal for the NASDAQ to fall more than 2% in a day. It's a more volatile index. So if the S&P fell more than 2% in a day, that'll get your attention, right? And it's possible. Not as much as the NASDAQ. So the NASDAQ, ever since its inception, ever since the very, very beginning day here, 85, this is why I use charts, so I would know the number, but somewhere in there. 9% of all trading days in the NASDAQ have had a loss of 2% or more. Okay? That's 730 now 2 days that the NASDAQ has done that. So it's actually kind of normal, about 10% of all days, if you want to think about it that way. 1 in 10 days falls 2% or more. Not consistently, but you get what I'm saying there. So when you look at something like that, you go, okay, well, that was horrible. This is a great pullback and all that stuff. You're looking for opportunity. You're not saying like all doom and gloom and all that stuff. Moving on. Crude oil chopping around in a range that's very much geopolitical right now. You got bonds moving higher. Thank you, for goodness sakes. A little bit more of a consistent attempt at people to buy the bottom of bonds. Thanks, Bill Ackman, right? So that's what's going on there. Gold up 10 cents, not a real big one there. Oop, I hit the wrong one. There you go. Remember, gold is just sort of stopping, catching its breath while it just ran up that big hill. That is totally normal, no thing to worry about there. And before we do stocks in the news, do you want to feel old for a second? Some of you do. Some of you are going to say, I'm young. Some of you are never going to have ever heard of what I'm talking about, which would be weird. 39 years ago, to the day, 39 years ago, the Terminator came out. Did you know that? It's been 39 years. Terminator, the original Terminator. It's crazy. Okay, stocks in the news here. All right, we're going to bounce around through these a little bit. There's a lot going on. Meta. You already probably saw all the earnings here. This is not anything new. I can't share anything new with you there. They beat on earnings there, basically guided in line. I just looked a little bit into this because I was curious. Just the metaverse division, and maybe this is why the stock is selling off here. Remember down here when they were like, we're going to invest in the metaverse, and investors were like, not with my money, and they sold, right? Just the metaverse division lost $3.74 billion last quarter. It had revenue of $210 million. So let's compare that real quick. You sold $210 million of services in this case, but you lost $3.7 billion. And the worst part is Mark Zuckerberg. He says, that amount's going to go up. Yeah, we're going to lose more before we start losing less. So just heads up there. Remember what happened last time he said that? I wish him the best. It seems really cool, but whew, that's a lot of money. Okay, Whirlpool. I did see a comment a second ago about circling the drain. Very clever. Good job. Whirlpool obviously down quite a bit today. I believe it was the second largest loser in the S&P today. It's a great name for like the health of the consumer. But what we just talked about the other day, people are staying put in their houses, which normally would be good. But we can now see people are staying put in their houses and they're not choosing to renovate, spend money on appliances and things like that. Anyways, they beat on earnings, generally speaking. The trouble was earnings. If you just look at the headline, you're going to think, oh, they beat on earnings. What happened? I don't understand. They stuck in basically a tax credit that helped them beat earnings by about 50%. So take that out and you don't have such an interesting earnings report there. And then they cut their forward earnings down to, I believe it was 16 a share, something like that. All I care about sharing is that, remember, stocks that beat but have been cutting forward guidance or guiding lower or you would say being soft on forward earnings, whatever the headlines you're used to seeing, that's the gist of what that means. All of those stocks have been down. 100% of those stocks that did that have been down, and Whirlpool's just another example of that. Ford, I've got my application in there at Ford to go work top hourly pay range thanks to the deal that they're hopefully going to get done here. Be $42, so $42 is more in an hour than we make on this show the entire week. So I'm, like I said, the show's over. I'll just be going to work at Ford. You guys have a great one there. That's what's going on with them. It's not official just yet. Still got to vote on it, but it seemed from the quick surveys that the news did that people were pretty happy with that. And now I'm going to pick on you again. Remember we do this? You're the reason that GDP numbers come out so strong. But things are more expensive, and we all want to complain about things being more expensive and Bidenomics and, oh my God, this and that, inflation, the Fed, I hate what they're doing. I see all the comments. It's kind of like you vote for somebody and, they win and you get to go, yay, I voted for that person. And if you didn't vote at all, remember how you teach it in school? If you don't vote, you don't get to raise your voice. Well, that's not true. You definitely do. But people would go, well, then why don't you vote? Okay, you're unhappy. You think that GDP number is a little bit wonky. Something's going on there. Stuff costs too much, man. It's harder to find a job. I don't know, whatever you're going through financially right now. Royal Caribbean is telling a different story. So I'm going to trust the audited numbers from the companies here. Royal Caribbean beats across the board. They did very, very well. And I looked for some of the quotes they may have said in there because Royal Caribbean, if you're not familiar with them, when they do their conference calls, they're very popular for giving quick little quotes that are essentially a hint. I don't know how to say it. They like to summarize everything in little quotes so that, they know the news is going to take it. They are seeing strong demand and strong onboard spending. Those were our key factors to our earnings beat. So strong demand to buy the cruise. Then you get on the cruise and you're spending even more money on the boat. So you're not scared, right? These prices haven't scared you guys. I don't want to hear it. And then I just had to, right? I had to throw this one in there, MarineMax. So MarineMax, they were expected to actually see a sales decline of 8%. Instead, they saw sales go up by 8%, 16% spread, right? So they saw their sales go up. Stock went down because, sadly, their costs went up too. They didn't make as much money off of you, even though their sales went up. Don't like to see that. We want sales to go up and your margins to get fat. That didn't happen with them. But nonetheless, you're still shopping there. And then Hertz. Pricing for Hertz currently above pre-pandemic levels. That's the way we say, prior to the world shutting down. So pricing is higher. Total volume is higher. Unfortunately for them, costs were higher as well. But other than that, you're still ringing the register for them. They're just having a hard time making more money off of you. So, yeah, good job spending all the money out there. My suggestion, maybe, stop, spend so much money, buy the necessities, stay at home, have a campfire. It's almost kind of campfire weather, right? Anyways, you guys are full of them today, man. Ouch, that hurts. I see what you're saying there. I caught it. I love it. All right, I'll take your questions. If you have any questions, tomorrow is Friday. Of course, we will not be here. We'll be here, but there will be no show tomorrow. Tonight's Wine and Wealth. We're going to talk about those retirement strategies, and in particular, what do we need to solve for, right? The strategies are sort of specific and unique to the individual, but what are the things that we just have to solve for, and specifically, how are we going to go solve for them? So it'll be a fun, interactive class here tonight for those that can make it. Otherwise, that's always archived and stuff like that. Yeah. All right. So let's see. Oh, by the way, while you're typing in your questions there are earnings tomorrow. Normally Fridays are a little bit quiet, but this is earnings season now. So we have ExxonMobil and Chevron. Those are going to be big. They've just decided to go on an acquisition spree there. So that's what's happening with them. AutoNation will be a fun one to look at there. And then Black & Decker, I believe. Oh, they're after hours. They are reporting along with T. Rowe Price, Phillips 66, AbbVie. Okay, so there's a handful of them. Yeah. All right, cool. And so let's see. So November starts the market bounce. Well, I guess, what is it here? It's the 26th already. Oh, well, I guess so, right? Wow, Jesus, the 26th. So Halloween's coming up? Wow. Got to get shopping. Sorry, I didn't realize it was the 26th. We just talked about this. Is Teladoc a dead company stock? Well, no, probably not. It's you know how I joke sometimes about like 3D printing? Oh man, that was all the excitement. AI right now is all the excitement. Pot stocks, ooh, wow. Well, I don't want to say meme stocks, but like COVID stocks, that was a hype. Logitech, Zoom, for goodness sakes, them, right? That kind of faded away. We won't see that same level of growth in the company unless the world shuts down again. And so there was a very high valuation put on a lot of those stocks. So I understand that one. JW going to be there tonight? All right, we'll see you there. Tonight's Wine and Wealth will be just for clients because we're going to be using a client software and so you would be bored out of your mind. You'd have no way to take action if you were not. But from time to time, and most of the time, we do make those available to research clients as well, if you want to join. But tonight is more geeky planning side of things. Yeah. A fun fact, collecting stock certificates is called scripophily. I'm a scripophilist. I'm a hip-hop scripophilist. I can't say that word. I don't know how to say it. Scripophilist. Thank you. Well, that's a cool one. So I'm a scripophilist. Yeah, there you go. People are like, don't you do anything? You ever go to sleep or whatever? No, I'm a scripophilist. I do my day-to-day work and then scripophily at night. Sounds like a board game. Historically, November and December, high volatility months. No, less and less. October is known for being the highest range of volatility out of the whole year there. So as luck would have it, I have everything ready. Your monthly range in October, we are living it. That is earning its keep, right? 7% from the highs to the lows. As we get into the holidays, it drifts down into the lowest range month. December, not known for being a high, wide-ranging volatile type month. Great question. Yeah. Tuesday's Halloween. Okay, so Tuesday, we dressing up? Yeah. I already got my costume. I already know. I might need some. I had since cut my hair, so I may need a wig. But yes, we're dressing up. Don't let me forget, because I will forget. There you go. Well, so REITs also, REITs and utilities. Just a hint of like people going, there can't be much more to these bonds, right? They're going to eventually be able to bake in these prices, adjust their balance sheets, figure out how they're going to move forward with these higher rates. They can do it. They've all lived through this before. And I think that's what you see is people going, maybe dip my toe and get started there. I've been watching that. Restoration Hardware, well, you would think it would have had a blast of a day today. If the economy is that strong, we should have plenty of money to spend 7,000% more on a couch than going to a regular store. Yeah, but I have no idea. I've never seen the value in that. I always pick on them, but yeah, I don't know. Yep. You guessing I'm going to be a pirate? Not even close. And I genuinely mean it. I already have the costume, so I will not change it. But if you guys followed us on other social media, then you would have already known, because I've already used it once. So it just shows what you guys pay attention to. Okay, what I need to pay attention to is our class tonight. Okay, we're doing we've got a pretty solid focus here tonight on those planning strategies, planning really sort of goals that we have to solve for as we get in and around retirement. Get your wine, get your whiskey. I will see you here in just a few hours, actually in the dojo in a few hours. Thanks for watching, everybody else. Appreciate you guys hanging out. Hope you learned something, and we will be back next week to do it all over again.